G'day everyone, welcome back to another episode of the Australian Property Investment Podcast. I'm always pumped to record one of these episodes because I get the chance to meet and speak to industry professionals who, what I say, live, breathe and eat property for breakfast. And as part of that, I call them subject matters experts, I call them best in breed. Generally, on the whole, they're just so willing to share their information because they want to see investors prosper and do well. And it's what we call a win-win. So start with, my name's Aaron Christie David. I run a mortgage broking business called Atelier Wealth. And this podcast was started because a lot of investors were asking us questions that kind of we had to stay in our lane. And so we brought in professionals to answer those exact questions. And today's guest is an absolute, I'm going to say, powerhouse in the property buying space. Good morning, Lloyd Edge. How are you doing?
Hi, Aaron. Really nice to be with you.
Yeah, mate. Oz Property Professionals.
That's the one.
Yeah.
Yep.
What we want to do is kind of lift the hood on your business, but most importantly, lift the hood on your journey as an investor, because I think that's powerful. I guess it's the journey that's taken you to what you do today, and that's the reason why you're a great buyer's agent. So that's what we want to talk about today. But before we do kick off, I had to read your bio and your history. You're someone who I call played the long game, right? When you talk about buying your first property and to where you've ended up today. And quite often it's a transition, not an event, when people go to buy their dream home. And that's something that we'll have a chat about in a little bit. But before we do kick off, how about we start with the 3 Ps? So yourself, a bit about yourself personally, professionally, and your property journey as well.
Okay, well, personally, I am very lucky to be married to beautiful wife Renee.
There you go. You're a good man, smart man. Start with that.
We've got 2 kids. I'm very lucky.
Yeah.
So we've got Riley, who's almost 3, and Kaylin, who's 10 months.
Wow. Now you are in the thick of things at the moment.
So, but they're gorgeous. They're a lot of fun.
Yeah.
And they do what toddlers do as well. So that's all good. And we have a dog, Frankie.
There you go.
Well. So I can't leave Frankie out of it because I take Frankie for a run every morning. So she's part of it as well.
Excellent. The decision to start Oz Property Professionals, take us through that.
Yeah, so the decision to start Oz Property Professionals was probably a little bit different to the way most people start a business. Is I'd grown my portfolio, and we'll probably talk about that a bit later, but grown my portfolio through the years while I was still working another vocation, while I was still as a teacher.
Yeah.
And then
that was your line of work, you're in teaching?
That's right. So I was a teacher.
Yeah.
And I was basically building my portfolio because I didn't feel that there's going to be financial security for me, in the future. And I wanted to sort of build some wealth, moving ahead and everything. And I was doing all this before I had a family. Yeah. And I started to get a little bit of, media attention. I was on a few podcasts and some of those property magazines, Australian Property Investor, Smart Property Investor, and stuff like that. And I actually started to get a few people contact me who wanted my advice on, property investment. Yep. And at that time, I couldn't really give that advice because I wasn't qualified at all in property. Yeah. But I could just speak to them about what I'd done, my success. Yeah. But one thing led to another. And eventually I got all my real estate qualifications. I started the business. But essentially, I had those clients kind of coming to me before I'd started the business. So I kind of started from that perspective, and one thing led to another.
You just touched on a point there as well, which I see a lot, especially both our industries. It's the notion of advice versus opinion. Right? Because at that stage, you weren't qualified. You DIY'd it, for example. So you kind of school of hard knocks, but you hadn't had the formal qualifications. So you can give an opinion versus now you can give advice, right? So take us through, you see that probably day in, day out where people have been given opinions and they're not really that great. Or sometimes they've got a really good kind of heads up and it can go both ways. So take us through the opinion versus
Well, absolutely. And the opinion thing is around, like I speak to a lot of people who may have spoken to some family members at the Sunday afternoon barbecue.
Yeah, that's a classic because we get them inquiring on a Monday, that's for sure.
Absolutely. Yeah, the inquiry level is always higher on a Monday. And that's an example of, people are well-meaning. Family members, for example, are well-meaning. They always want the best for you. Yeah. But I really think that you need to be careful of who you're taking that from because it's not actually advice. So unless your family member or the person who's given that opinion has actually firstly had a lot of success in what they're doing, but also qualified to do so, you should be really seeking that advice from somewhere else.
I call it a no pay, no say policy. So if you're not paying the mortgage, you don't really have that much jurisdiction to make the decision with all due respect.
Yeah, absolutely, for sure. And it extends a lot further than that. Yeah. Obviously, as you'd appreciate, Aaron, is that even for myself, I can give advice on property, but I don't ever give advice in terms with finance or with legal matters or with accounting matters. Now, I may always know the answer. Often I may not. But if I do know the answer, I will always say, please check that with your solicitor or go and speak to your broker.
Yeah.
Which is why it's very important for me when I'm working with my clients is that we have a good team of advisors around them. So, they don't just work with me as the buyer's agent, but we work as a whole team so everyone can advise. But there's a big difference between people who are qualified to advise and those that are just giving the opinions of what they think. Because property is a funny thing. Everyone seems to have an opinion on property. More so than, like if you're a brain surgeon, most people don't really have,
They're
an
not
opinion.
going to question your judgment calls.
That's right. But with property, everyone seems to sort of have an opinion because they've heard about what the property market's doing, or they live in a house, so they would like to have an opinion on buying property and things. But that's obviously different to the advice factor.
Thanks very much. One of the things I mentioned before is I really want to go down that journey because you started, and we had a chat just beforehand, humble beginnings, like the one better, and from there it's kind of springboarded. And I often say that first property becomes your cornerstone property because if you get that right, it does two things. It gives you the equity, but also gives you that confidence as well. And it sounds like you did get that bit of that springboard from that first property. So take us on the journey, mate, from where you started to where you are now.
Yeah, so the very first property I bought was a 1-bedroom apartment. Now, I really didn't know what I was doing, and I didn't have a strategy, so a lot different to the way I invest these days. But I did have, a loan approval. I had a borrowing capacity of about 250, 300,000. So,
can I ask what your income was at the time? Because you were a teacher, right? I'm going to take a stab in the dark on the multiple on that. I
was earning about 50K at the time.
Which on the stats, it's a lot of property investors are sub 100K, right? They're not high income earners, which kind of throws that notion out the window. But yeah, keep going, mate.
Absolutely. And with that property, I sort of got lucky in a sense because I didn't really think about all the factors that you should go into buying a property in terms of location and thinking about the yield and all that kind of stuff. But I was just lucky that I did buy in a fairly good area that was close to amenities, close to the station, not far from the water. Beautiful. And it ended up performing fairly well for me. But one mistake I made was I bought that first property just after the Sydney Olympics. So the market had already boomed. Yeah. And I actually bought at the wrong time in the market when the market was at the height of the market and then it actually started to go backwards. So something that I learned a bit longer. So it actually took a while for that property to actually go up in value and things.
Yeah. So, but I mean, it still got you started, right? So it's hard to kind of say, you mentioned before you used the word lucky to get in, but it's also unlucky timing. But you look back now and connect the dots and go, actually, I'm kind of glad I got in when I did as well in one regard.
Absolutely, Aaron. Now, if I look back now, so that was in 2003. Now, if I look back now, which is almost 20 years, that property has tripled in value.
Unreal.
And I've actually refinanced it 4 times to use the equity to buy other properties. So I've actually helped that to really launch other properties in my portfolio, particularly in those earlier days.
Fantastic. And then take us through from that one, the one after, and as you grow.
So the next one, now that first property was actually a home. So I actually lived in it for a while.
Yep.
And then decided to move out and rented that out. And then I bought another home to live in. So I wasn't just building a portfolio at the time to invest.
Just lifestyle.
I was actually building, I guess, homes because I wanted to sort of live in a home and stuff. The second home I bought was out at Ingleburn in the southwestern suburbs.
I know the area very well, mate. I'm a boy from the burbs. So.
Now, the thing about that was a 3-bedroom villa. Yeah. And I bought that for a really good price. That turned into be a good investment in the long run because Ingleburn actually had one of the lowest vacancy rates in the country. Yeah. Going forward, had a lot of growth in those southwest Sydney areas. Yeah. But the thing about that is that's where we decided to make that sacrifice because I was actually working in Bondi Junction.
There you go. There's a few hours spent on the train each way.
Yeah, well, I was driving. I was on the M5.
On the car park. Yeah.
And fortunately, I had a motorbike and sometimes I'd miss the traffic and go up the side. Yeah. But, if it was raining, I might be in my car and it could be 2.5 hours each way. So that was a bit of a sacrifice, but I knew that I wouldn't be there forever. Yeah. But that would be a bit of a launching pad while I was growing equity. That particular property, I did a few things to it to also add some value, and that's where I started to look at creating that equity. So, I did a few little cosmetic reno type stuff that added some value, helped me then to get into another property. The property after that was actually a property that was a cash flow positive property, and I made a mistake on that one, because I actually approached a buyer's agent, and this was a sort of a catalyst for me wanting to be a buyer's agent later on. But I approached a buyer's agent and I said, "This is what I'm looking for. I want something that's positive cash flow so that I can start to, retire in the future and everything like that." Yeah. And of course, that buyer's agent ended up buying exactly what I was looking for, but it was really the wrong property. So they should have advised me about what I really needed rather than what I was wanting. So it was a property in an area that had no growth drivers, just one industry.
Right.
And when that industry collapsed, the bottom fell out of that economy in that area, so the market went backwards. And obviously since then, I've sort of learnt that you really need to be buying in an area with a lot of industry growth drivers.
Yeah.
So I always look for, at least sort of 5 pillars of growth, and always look for, having, hospitals in the area, universities, where the government is spending money on infrastructure, where the population is moving to, the jobs growth, the type of people and the demographic there, and all those sort of things that particular area didn't have at the time.
Yeah, okay.
So I've learned a lot from that.
And it's almost the saying, right? You learn more from sometimes your mistakes and your fails than sometimes the wins, because, some success does leave clues, but also you build up that scar tissue from I won't call it bad decisions, but some taking a decision that didn't kind of work out.
Yeah, absolutely. Now I've actually still got that property.
There you go.
And it's swallowed up in my portfolio, probably because if I sold it now, I wouldn't get my money back for it.
Yeah.
But also it's kind of a reminder. And when I'm talking to my own clients, I can say this is what not to do. I can prove it.
I can live and breathe it. Yeah. Excellent. Very good. And then the transition we mentioned to now buy your family home, which is a wonderful achievement. And, I hope you don't mind me sharing, but it's a wonderful location on the water, right? So obviously very blessed to call that place home. So take us through the journey to now buy your home as opposed to keep building the portfolio. Yeah, so I used my portfolio to get that home eventually. So I kept building my portfolio, and I did buy some more homes to live in. So I eventually sort of moved to the inner west. Okay.
And I met my wife, and we actually, I think we'd only been dating for 3 months, so we bought a house together.
There we go. There's no such thing as short-term commitment, right? We're all in after 3 months.
So I was right into it. I just thought, let's do it. Yeah. And that proved to be obviously a good area to buy in.
Great.
And later on down the track, I ended up selling that property at a fairly significant profit, which I could use it as a good part of my deposit for my dream home.
So the decision to keep versus sell, because that's often one that comes up. They're like, oh, look, I don't want to sell because it is performing quite well. And if I keep it or sell it, crystallize it, what was the decision to sell? Because that is quite a big decision, isn't it? Yeah, absolutely. And I've sold a few properties over the years, although I've still got a lot in the portfolio. So for me, there's always a strategy behind what I want to do. So for selling, it's often because of serviceability. And you know yourself, obviously, as a broker, that everybody, no matter what your income, you do hit a serviceability wall. Even for me, I've done a lot of duplexes over the years. Right. You're building duplexes, but they've been quite good because you could keep one unit and sell the other unit, which pays down some debt and all that. Yeah. But with our home in the inner west, when I sold that, I kind of needed that to help fund the because we bought an expensive home in Lillypilly down south. And, when you say that's an expensive home, it's got quite a few zeros attached to that. It does have a few zeros there, but the bank's not going to lend you that many zeros. So I needed to make sure I had a big deposit there as well. Yeah, right. So I sold that, and also another investment property in another city in Newcastle to fund that. So there's always a strategy behind that. So I sold a couple of properties to fund that property, but also I've sold other properties either to pay down some debt to improve my serviceability, or maybe the properties themselves weren't performing that well. Okay. I had a property that I sold this year that was in Queensland, and I'd held it for 10 years. And when I really evaluated it, it hadn't performed as well as it should have. I didn't feel it belonged in my portfolio, so I'd sell that. So it's never as simple as just people saying you should never sell a property. Yeah. There's always a reason to sell. Yeah. But although I sold a property this year, I also bought 3 properties over the last 4 months. Fantastic. So I'm still buying. Yeah. But you just got to be careful with your asset selection, and if things aren't performing that well, then you need to reevaluate whether that property is going to be the right one for you as well. Yeah. I want to go kind of back to the start, which is on your income, right? When you first started out, and quite often, when we meet younger investors or income investors that don't have that high income, for example, 6-figure incomes, it gets a little bit worrying for them because it's taken them that long to save for a deposit, or the next decision could be quite critical because they make a bad one, it's going to set them backwards. So take me through that initial fear period where you go, hey, look, the stakes are getting a little bit higher. I make a bad decision, it's going to set me back, for example. It's just going to take longer. Obviously, you didn't have that investor mindset at the start, so you didn't know what you didn't know. But now looking back, were the fears real? Did you kind of Did you bring them up? How did you go on that journey?
Yeah, I did. And one of the things that I think is really important, particularly looking back, is that I always did try to buy under my borrowing capacity. So I never maxed myself out. And that's something that I even talk to my clients about these days.
Nice.
Never maxing yourself out, and also try to keep that cash flow up as much as possible. So I am an advocate for positive cash flow, or at least neutral cash flow.
Yeah.
I'm not really into negative gearing unless it's got a place in your portfolio if you really need it for various tax deductions or whatever.
Or capital growth, for example.
Well, capital growth, obviously, if you're buying in an area like Sydney or Melbourne. So there are strategies there.
Yeah.
But if you're on a lower income and you are earning, and I do work with a lot of people that might be earning 50, 60, 70K, and they've got a small deposit saved, what can we do? Well, we need to get into a regional market, and also the cash flow is better in those markets. So if you can get something that's positively geared, then it alleviates some of the stress, because the rent from the property is actually going to cover your expenses. So, and that's basically what positive cash flow is on the property. So that can alleviate that stress essentially, and also help you be comfortable to move forward into another property rather than just tapping yourself out straight away.
It's an ethos that you kind of embrace, which is the positive geared. And it's kind of become your book, hasn't it? Positively geared. And you've got your second book coming out, which is called Buy Now. So take us through that. It's always interesting to have a chat to people that have put out a book and just go, look, the philosophy and the ethos behind putting a book, and I can almost guess you're probably having the same conversations day in, day out. And you go, well, look, hang on, read this, absorb it, soak up that information, then come back to me when you've got that knowledge gap up. Is that kind of the driving force behind that and what's inspired you? The
thing that inspired me to write the book was not really not as a lead magnet or some kind of marketing material like a lot of people do. It was really to get my message out there.
Fantastic.
And it's because of the journey I've had. So it's not like I started the business and then I was looking for clients and I thought, oh, well, let's write a book. It was more like, well, I have had a journey, and I detail the whole journey in the book, from when I grew up on the farm. My parents didn't have a lot of money, but we had everything that we needed. I moved to Sydney. I studied music. I then taught music for a while. And then how I started my portfolio, I detailed that, and also how my strategies evolved over the time and grew my portfolio. And I'm very open about the mistakes I made as well.
Great.
And then I have a lot of quotes in there from some of the professionals I work with. So people like my accountant and my mortgage brokers and things like that have put quotes in the book so that people can sort of take that sort of is obviously general advice, because the book can't take specific advice from the book, but it gives people a bit of an insight on how to build a portfolio and what I've done essentially. And and a lot of people do obviously contact me and get my help to help them with their portfolio. But it really is about just trying to get the message out there and letting people know that if I can do it, so can you. Because I started on a low income. I was on $50,500 or something when I started, and most of that portfolio at the time, until I retired from teaching, was done on a sub 100K income. So, I wasn't earning, hundreds of thousands of dollars like there is a bit of a perception that you need to be.
Correct. I don't want this to come out the wrong way, but quite often when we deal with some people that are earning less than, say, 100K, for example, they almost have a little bit more hunger because they know I have a finite income, and whereas someone that's in a sales role, management role, they've probably got the ability to earn more or grow or invest in themselves to then grow their pay grade. But someone in that situation goes, well, all I'm going to get is the CPI or the next rung up. So I need to find another way out to build that revenue stream, because I cannot trade my time for this cash that's just not going to increase potentially as well.
Yeah, absolutely. And I found that as well. And I was the same, because I was just relying on the CPI increase, or I could be getting 2% pay rise a year.
They're going to tell you what to earn, right? Yeah.
That's right. Yeah, absolutely. And for me, what I did learn over the years is that having cash flow positive properties that's only half the thing. It's about getting properties that actually get that capital growth as well, because that's what really grows your wealth. And that's how I built my portfolio through that capital growth. So that's actually really important, and having those strategies in place. And when I started doing things like really manufacturing equity through things like subdivisions, small developments like duplexes, renovations, and really manufacturing that equity, and then having that equity there where you can, if you've got the serviceability, you can refinance some of that and use that as a deposit for another property. Or, if you don't have the serviceability because your income's a bit lower, you can offload that property. And you might need to pay a bit of tax on it, but you should, as long as the numbers stack up and you've done those numbers, you should be able to walk away with a bit of a profit, which can be a deposit to get you further ahead in your portfolio. So it's all about being strategic about how you do things.
Yeah, perfect. You've answered two big questions, because I often say an investor will run out of one of two things, or maybe both. They run out of borrowing capacity, or they run out of equity. to run out of borrowing capacity, maybe sell a property, for example, add some value, try and get it, try and get your income up, chase positive cash flow versus a run out of, what was the other one? Equity, right? So when it comes to equity, it's like, do you do the subdivision? Do you do the granny flat? Do you do the duplex? Do you find something that makes an X factor about this property and then creates that as well, right?
We do.
So that's how you've kind of played the game of finance effectively.
Absolutely. Every time I find a property, I'm always looking at how we can add value to that property.
Great.
Now, you may not need to add value to that property right away because you may not have the cash for the equity to be able to do that because it costs money to build a granny flat.
Yeah.
It costs money to do a renovation. But if it's got the potential to do that, then you can do that sometime in the future. I love finding blocks that might have a large backyard. It's got a wide access handle, so you can access the backyard. I check all the zoning and everything with council, and we might have to do a granny flat there. Or it might be a block where you can do a subdivision where you can actually keep the house, subdivide the land, and then at the block you've subdivided off, you could potentially build another dwelling on that. Or again, if you don't have the serviceability to do that, you might be able to sell that block and just get some money on the vacant block. And I've done that with people as well.
Fantastic. Very good. I guess as we wrap up, I guess you're not, again, we use the word advice as opinion, but parting words to say newer investors or investors starting out on their journey, what's kind of your way to give them a leg up? And
I think the most important thing is, have a strategy and do lots of research and get some confidence there. So and probably the most important thing, and the next book I've written is called Buy Now.
Yeah.
And one of those things about that is that I don't believe that anyone who sits on the sidelines has really been able to get ahead. So people often sit on the sidelines and think, oh, what if the market crashes at the end of the year? Maybe
rates go up. What if?
Yeah. But if the rates go up, the markets will come down, or I get a better deal at the end of the year.
Yeah.
But when you sit on the sidelines like that, it's often it's fraught with danger. So what I'd suggest is I often get asked the question: is now the right time to buy? And that's often the wrong question. I think it's where should you be buying in the current markets?
That's right.
Because there's definitely some good areas to buy. Maybe some bridesmaid suburbs that haven't quite boomed yet.
Yeah.
Depending on your strategy, you need to look at that, because if you're in a position, you got the finance ready, go ahead and do it now. But just make sure you're doing it with a strategy. Seek some professional advice, and that advice should come from a number of people. And like I wrote about in my book, Positively Geared, the dream team, and that dream team should consist of a mortgage broker, financial advisor, solicitor, accountant, and maybe a buyer's agent as well.
Excellent, mate. Sage advice. Thanks very much. And I really appreciate you sharing, and we'll also update the links to your book. So if anyone's keen to check out your book, read it, order a copy, we'll put the links in there as well, mate. So thank you very much. Really appreciate your time and really appreciate you sharing your knowledge with us. I love when we get professionals on here that don't have an agenda. They just want to see investors do well, because a rising tide will lift all ships. And I really thank you for your time and your energy.
A pleasure, Aaron. I really enjoyed it. I hope your listeners get something out of it.
Absolutely, mate. Thank you very much. That wraps up another episode of the Australian Property Investment Podcast. You want to reach out to Lloyd and his team, we will include the details of his business below. And until next time, take care.